And joining me now is Sam Bankman-Fried. He's the CEO of the cryptocurrency exchange FTX. You may have seen their TV ads occasionally, and one of America's youngest billionaires. And recently he's used that money to become one of the biggest donors in this year's midterm elections. Sam, nice to see you. Thanks for coming in.
Of course. I mean, at the end of the day, look, there's a question of what happened and why, and who did what caused the meltdown. And I think that reads very differently, right? When you look at the classic Bernie Madoff story, there was no real business.
Sam Bankman-Fried, the founder and CEO of the former third largest cryptocurrency exchange in the world, FTX, was dubbed as the most generous billionaire in the world earlier this year. But apparently, he's not just the most generous billionaire, he's also one of the best magicians in the world after making $10 billion of customer funds disappear overnight. November 2022 will forever be remembered as a dark month in crypto history. It is the time that the world's third largest centralized cryptocurrency exchange collapsed, losing customers a total of $10 billion in assets. The crypto market crashed as a result, with Bitcoin prices dropping 25% overnight. The news of FTX collapse came as a surprise to everyone, even Sam Bankman-Fried. He gave a statement to Forbes where he said, "I'm just as shocked and upset about the situation as everyone else." But is that the truth? Was it really a surprise for Sam? Or is there a more sinister truth behind this? Let's dive in together. Sam Bankman-Fried graduated in 2012 from the Massachusetts Institute of Technology, where he studied physics and mathematics. He moved to San Francisco afterwards and worked at Jane Street Capital as a high-frequency trader, starting in 2013. In 2017, Sam left his job at Jane Street Capital to start Alameda Research, a cryptocurrency quantitative trading firm. Not only does Sam trade cryptocurrencies, but he also designs algorithms for automated trading. Because of this, they soon become profitable by implementing delta-neutral strategies and taking advantage of arbitrage opportunities. For instance, in January 2018, Sam took advantage of the higher price difference between Bitcoin in Japan compared to its value in America. Alameda Research earned about $20 million from the arbitrage opportunity. Sam quickly realized that in order to make more money, he needed access to more capital, so between November 2018 and January 2019, Alameda Research raised money from its investors by promising high annual returns with no risk involved. In the same year, Sam established FTX, a centralized cryptocurrency exchange. According to the anonymous source, FTX was supposedly created as a way for Alameda Research to receive funding more easily because they had countless issues while attempting to raise money previously. In the early days of FTX, Alameda was the main market maker on the exchange. Since obtaining more users was still a goal for FTX, a large portion of their trading volumes came from Alameda Research. However, employees of Alameda revealed that they have an exclusive API key that allows faster access than any other user. This gives them a systematic way to profit off their own clients, essentially stealing from them. As FTX continued to expand, it demanded more capital. To take advantage of the DeFi summer hype, FTX created Zero, a decentralized exchange built on the Solana blockchain. They attempted to raise money rapidly, urging investors to make quicker decisions. The faster investors committed, the lower price they received. Some investors got a 50% higher price by committing just a few hours later. After this, FTX became directly involved with the multiple projects in the Serum and Solana ecosystem like FIDA, Oxygen Protocol, and MAPS. All of these projects launched their tokens relatively close to each other. These look like third-party projects from an outsider's perspective, but most of them were actually incubated or operated by FTX employees. So why did FTX need fast capital? The reason for this is likely because FTX and Alameda were more closely connected than people realized. At that time, Alameda was moving away from its earlier strategies as it started to lose its advantage. The company began making large bets on crypto using a lot of leverage. The DeFi assets they created were leveraged to fund their bets. They started controlling the prices of these assets to make it look as if they held a large amount of money. How? For example, if Alameda funds a project with $2 million at a $10 million valuation, meaning they would get 20% of the tokens, and FTX then lists the tokens, but only releases 1% to the market, leaving supply low. Thus, Alameda could use a few $1 million to prop up buy orders and create an inflated, fully diluted valuation of, let's say, $1 billion. Now, their initial investment is worth 100 times more on paper. By doing this, Alameda appears to have a large and diverse balance sheet for potential lenders, which it can then use as collateral to borrow more funds for investments. Employees who tried to question this practice were threatened by Sam into silence. Alameda and FTX equity values were based on hardly liquid assets. One example being the FTT token issued by FTX. Out of all exchanges, FTX was the only one that allowed people to borrow funds using tokens such as Serum and FTT for collateral. This is how Alameda and FTX probably incurred a $10 billion hole. Alameda pledged illiquid collateral to borrow money to finance bets, which got margin called when the whole crypto market went down. To cover this, they started siphoning users' funds from FTX to Alameda. This means liquid reserves on FTX were likely lower than deposits, but chances are this hole was manageable, given enough time, as more FTX/Alameda's illiquid assets vested over years. There is a great risk that comes with all this. If the price of these tokens happens to crash, Alameda will be forced to liquidate. This is why Sam was so aggressively pushing for FTX's legitimacy and trying to form a regulatory moat around it at the expense of DeFi platforms. To try and achieve this goal, they started doing large marketing moves, one example being their $135 million deal to rename the Miami Heat Stadium after FTX. Out of Biden's campaign donors, they were the second biggest, and Sam even tried to join Elon Musk's Twitter bid. These actions were taken to secure FTX's equity value and the FTT token so they would not collapse. It was successful, as the following rounds of fundraisers increased FTX valuation to $32 billion in January 2022. Furthermore, at one point, the FTT token reached a market cap of $10 billion. With this prevalent success, aided by advertisements appealing to retail audiences, FTX soon became Binance's main competition, eventually becoming the third largest crypto exchange in the world. Sam was also trying to increase his own public profile by donating to numerous charities. He even said that he would donate most of his wealth, leading him to being dubbed the most generous billionaire in the world. This was probably an effort to seek legitimacy in Washington, D.C., so that he can push through his proposal regarding crypto regulation, which would make Sam's exchange more advantageous than its rivals. This also led to a Twitter spat with Changpeng Zhao, or CZ, the founder of Binance. In a deleted tweet, he wrote, "Excited to see CZ repping the industry in DC going forward. He is allowed to go to DC, right?" But this Twitter spat wasn't the start of their feud. In 2019, Alameda allegedly tried to manipulate futures on Binance, but their effort was thwarted by Binance. Then it all started crumbling down for Sam. On November 2nd, 2022, CoinDesk released a report regarding Alameda's balance sheet. They found that a large portion of Alameda's $14.6 billion in assets are assets issued by the FTX team itself. On November 6th, CZ announced that Binance would sell all of its FTT tokens totaling $584 million, which would cause the price of FTT to drop sharply. This was bad news for FTX and Alameda. In response, the CEO of Alameda said that their balance sheet doesn't reflect around $10 billion worth of assets. A statement echoed by Sam. These statements only added to fears that Alameda and FTX may be linked more closely than previously thought. CEO Caroline Ellison of Alameda then made a public offer to CZ proposing to buy all of their FTT at $22. This deal would be mutually beneficial as it could prevent the crashing price of FTT and allow Binance to still make a good profit from their tokens. Nevertheless, this also led to speculation that perhaps Alameda had loans that would be liquidated if FTT traded lower than the proposed price. When the market began to crash, people started taking their money out of FTX. It was only a matter of time before a bank run occurred. Withdrawing assets from FTX was the best option and the most logical move. If FTX went under, then at least your assets were safe somewhere else. Then at least your assets were safe elsewhere. And it didn't go insolvent. You would only lose out on a small withdrawal fee. On November 8th, while fully aware of the severe circumstances his exchange was facing, Sam claimed to the public that FTX was heavily regulated and audited with $1 billion in extra cash, which wasn't true. He not only kept this information from his employees, but also asked them to commit perjury publicly. For example, he had them say that FTX doesn't invest client assets even in treasuries and has enough to cover all withdrawals when neither were accurate statements. However, the truth was entirely different. On the same day, FTX froze withdrawals without notice. Then the next day, Sam announced a possible deal with Binance and stated once again that customer assets were one-to-one back. People continued to believe that FTX was only facing a liquidity issue instead of being insolvent. Meanwhile, something strange was going on. While withdrawals were frozen at FTX, Alameda was still able to withdraw funds from the exchange. Caroline claimed that this issue only affected the FTX international entity and not FTX US. However, the following day CZ stated that the deal with FTX was no longer valid because there were indications they were insolvent instead of only encountering a liquidity issue. Shortly after this, FTX allowed withdrawals again for customers living in the Bahamas. They claimed to be in compliance with the regulations of the Bahamas, where their headquarters was located, but it was soon revealed as false by Bahamian regulators through an official statement. Some of the employees who withdrew assets were not even based in the Bahamas, leading people to speculate that insiders were taking advantage of the situation. These withdrawals raised suspicion because they looked similar to those made by actual Bahamian users. On November 11, 2022, Sam filed for Chapter 11 bankruptcy in the US. Withdrawals began to be paused again. However, hundreds of millions began to be siphoned from FTX. It was claimed that FTX was moving its own assets to cold storage, and later investigation also revealed that out of the $10 billion FTX user fund siphoned by Alameda, $1 billion was still missing. Where is it? Was it stolen by Sam himself? Of course, Sam denied his involvement. He said that he wasn't aware of everything that had happened, but the YouTuber CoffeeZilla, who has done a stellar job investigating this FTX collapse, revealed that Sam's former employees said that it was impossible for him to be unaware of everything that happened. Sam was a genius, and his office was just next to Alameda. They worked closely together, so it was almost impossible for him to be in the dark about everything. So what do you think? Did Sam steal all of those user funds, or was he just as ignorant as he claims to be? Click like and share if you enjoyed this video, subscribe for more videos like this one, and see you in another video.